Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Friday, February 10th, 2023. Before we dive into all the charts, I just want to encourage you to please click like if you haven't already. It helps us out a great deal in being found on YouTube. Also, subscribe to the Wicked Stocks YouTube channel. It'll provide you notification each and every time new content has been uploaded. That includes the daily Tesla report and the daily Apple report. You might even take a look at wickedstocks.com. We offer a full array of analytical videos that we put out regularly, daily Triple Q, daily SPY. Today, I'm talking Thursday afternoon for Friday's report. So on Thursday, we put out Microsoft, a 10-minute Microsoft video with signals there provided. A couple of days ago it was Google or Alphabet. And we do two of those a week that you never really even see on YouTube. So also the daily Triple Q, daily SPY, weekly S&P 500, weekly NASDAQ 100, and weekly TLT, that is the long bond ETF. To name a few. So that pretty much rounds it out. So here we are. Let me jump into this particular chart. We'll start with the big picture as usual and work our way in. About a month and a half ago, we came off of this targeted channel support, presently 86.48 to 98.18. And about 3-4 weeks after testing it, we pushed through this former channel bottom that was anticipated to possibly contain monthly buying pressures at the time. The Tesla put out pretty good earning numbers. And so we settled above this area. When we closed above the 154.57 to 162.68 area, I maintain now a 2 to 3 month target in the 230s, 240s. This 255.69 channel top dropping into the 240s as we move into March, into the 230s as we move into April. It is a 2 to 3 month objective, and we're about halfway there as it is right now, coming off of this channel support in the 154.57 to 162.68 area. So that is the big picture. Still anticipating the 230s, 240s. Now, and let me actually just jump to the day itself because I think it's a lot easier to talk about. Actually, what I will look at is this big picture. I've been showing this as our initial 2 to 3, 3 to 5 week objective when we closed above this channel structures in the mid 150s, low 160s. It's the 208.24 area, which we pushed through decidedly on Thursday, and the 221.25 3/8 Fibonacci. Both are Fibonacci's. 208.25 for the day I've reduced to an intraday level. We did close just below it, and just below it, holding below it, I should say, 208.24 today. We'll keep 199.90 in reach today. 199.90 is shown here. This is a near-term, I should say, short-term channel bottom off the last week of trade. So if we open below 208.24, it can contain intraday buying, and below which 199.90 is in reach today, where a daily low can be made. I like to see the market come off of this. I'd like to see us close higher on the day above yesterday's 207.32. In fact, if we test 199.90 today, it would be nice to see the market close out above 208.24 at the end of the day. Then we've got this 221.25 targeted level in reach within just another day or two. 221.25, as I've been saying, can contain weekly buying pressures, possibly into March trade. Now back to the intraday, I will mention that if we open above 208.24, 214 even is in reach, and that is nothing more than Thursday's high. Both have intraday pivot point qualities. 208.24 holding below 199.90 expect. Pushing above 208.24, expect a retest of yesterday's, that is Thursday's 214 high. And that can contain intraday strength, but I really want to use it more as an upward pivot point. I don't think being an aggressive seller at 214 even is warranted, but if we push through it, I think you can expect the targeted 221.25 on an intraday basis, where once again, we can top out through next week, possibly into March trade, and from here perhaps fall back into the 150s, 160s within 2 to 3, 3 to 5 weeks of testing 221.25. But, because we are still anticipating 255.69, this channel top, over the next, I'm going to say, month or two, now that we're several weeks into that target, a settlement today, for instance, above 221.25, as you can see on this chart here, would present 254.68 on the daily chart within probably 2 to 3 weeks. 254.68 or on the weekly chart, as I showed earlier, 255.69 is a significant resistance level for Tesla moving through the second quarter and even into later year. In my opinion, we need to get up and over this structure to signal longer-term bullish continuation into later 23. Until then, this is an area this stock can get exhausted and fall off from as we move through the second quarter and even into later year. So I'll just leave it at that. Hi, if you enjoy watching our daily Tesla report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. Back to today, holding below 208.24, 199.90 in reach where we can bottom out for the day, pushing or opening above 214 even, that 221.25 Fibonacci in reach today. Let me find another daily chart here. There's your 199.90, able to contain session weakness. Now, if we break 199.90, I would expect 194.92 intraday, and if we close below 199.90, then over the next couple of days, 188.80. You can see I've got 199.90 as a downward pivot. You should pay attention to this if your time horizon is over the next week or two, because I do think that if we close today below 199.90, by the end of next week, we should drop into what is now in the upper 170s. So closing below 199.90, if your time horizon is 3 to 5 days, if you're a 3 to 5 day swing trader, no good reason to be long this market, because I think we'll fall into the 179.09 to 179.89 area where we have a combination rising 1/3 speed line and extreme channel bottom that can, I have it weighted as a 4-star support level in light of the fact that we've had some recent buy signals able to contain selling through the rest of February. And from here, we can turn back up to 221.25 within 2 to 3 weeks of testing the upper 170s and possibly upward and onward beyond that 221.25 and into the 250s, as I showed earlier. Now, it's not going to happen today, but if over the next 3 to 5 days we do close below this 179.09 rising support, then we enter a meaningful, what I would call 1 to 3 week sell signal, depending on where the speed line is at the time. Bottom line, if we close below 179.09, I have 140.91 as a 2 to 3 week objective. But you can see that over the course of the next week, it actually converges with this long-term support area on the weekly chart shown here. So if we close below 179.90, it essentially means that we'll break back into this long-term channel support where we could actually bottom out through March trade. Here it is again, but blown up. And it is this speed line that would be the objective, but this speed line converges and pushes into the significant zone of support over the next week of activity. So closing below 179.09, it merely means that we'll break back into this channel support where we could bottom out through March, possibly longer, turn back up again from here, 221.25 in reach within a month or two of testing 154.36 to 162.77. And as I've been saying, the 250s remain in reach. This is probably a better image of that. This says it all right here. If we fall back into this zone, we can bottom out through March and turn back up again. And within a month, 2, 3 of testing the mid 150s to low 160s, this 255.69 channel top, targeted channel top, I might say, in reach within 2 to 3 months of testing the mid 150s, low 160s. Now, if we were to close below 154.57 in the coming weeks, that would also entail a settlement below this speed line at 140.91 by that point in time. And that could pivot the market aggressively south. And by that, I mean back into this zone of long-term support. that is presently in the 86.48 to 98.18 area. I don't really want to go there. I don't think it's likely. I'm just kind of giving you the big picture. The big picture right now, if your time horizon is 2 to 3 months, and I think this is the last thing I'll say, is that we are constructive in this market into the second quarter above the mid 150s, low 160s, anticipating the 255.69 descending channel top as a 2 to 3 month target. We're 3 weeks into that and we're halfway there already, more than halfway there. So we may reach this upper area by the end of March. And if so, it can contain buying through the second quarter or into later year. Inversely, if we close back below the mid 150s, this thing can unravel all the way back and take this low area out in the very low 100 area and retest this channel structure that is presently 86.48 to 98.18. I'm not expecting that, but if the market closes below 154.57, I would be. And I think I would just leave it at that. I don't know if there's anything else to say here. I fleshed out the day trade dynamic, pushing above 214. Even today, 221.25 in reach where we can top out through next week. Holding below 208.24, 199.90 in reach where we can place a daily low and possibly bottom out into next week. If we close below 199.90, 3 to 5 day sell signal down into the upper 170s, rising at a pretty steep pace. And that is all I have for Friday's Daily Tesla Report. Please click like and subscribe. Check out wickedstocks.com, and we will talk Sunday afternoon for Monday's letter. Have a great weekend.